What's going on, traders? Welcome back to the channel. In this video, I'm doing something that I've never done before. This is going to be an entirely free trading course. Everything that I have learned in my 8 years in the markets that is lodged deep inside my brain, I will be attempting to give to you entirely for free. Now, I am well aware that a majority of you guys, meaning 95%, maybe even higher, are not going to watch this until the end. Your dopamine receptors are most likely fried. In about 3 minutes, you're probably going to skip to another trading video or just do some bullshit that's not going to help you, that's not going to make you money. I'm okay with that, okay? This video is for that small percentage of you that are actually going to stick this through to the end, because trust me, this video is going to have so much value, because there are quite literally paid courses worth thousands and thousands of dollars that are not going to have the information that I'm going to put in this video for free. So why am I doing this? Well, it is a cloudy day here in Miami. Nothing really better to do, okay? I'm done trading for the day, so you know what? Let's do a free course to help all of you guys out. This is what I wish I had when I started trading. So without further ado, let's jump into it. The first thing that I want to go over are the foundations of trading, okay? What trading is and what trading isn't. Okay, trading is not a get-rich-quick scheme. A lot of people come into the markets, they want to quit their 9-to-5 job, they want to make X amount of dollars per year trading. Fine, that's great. You can do that. But mark my words, if you come into trading with that mindset of I need to make money, I need to make money in trading to survive, you will not find success. When you really need something to work out, it usually doesn't work out. But when you're more nonchalant, you're more relaxed, you have a system in place, you understand that, yeah, I'm going to lose trades here and there. What you'll notice is that the universe actually rewards you. It's like the less you're trying, the more success you see. I'm sure someone could answer in the comments what the reasoning for that is, but it is absolutely true in trading. Do not come into this thinking you will get rich quick. Do not come into this with the need of making money quickly. Okay, the other thing, please do not over risk in trading. Okay, do not over risk, do not over leverage. This is like the one thing that I can't help you guys out. If you guys cannot manage your own risk and you're full porting your entire account, or you're risking 30% of your entire net worth on a trade, you're kind of doomed, okay? Will you make mistakes where sometimes you over risk or sometimes you revenge trade? Yes, everyone goes through that. But don't be taking loans out of your house to trade the stock or crypto markets. That has never worked once. That will never work. Okay, the last thing I want to mention here is that yes, a majority of traders fail. Probably over 90% of traders are either break even or unprofitable traders. Now, does that mean that you should get discouraged? Hell no, okay? Because a majority of these traders don't have the proper training, they don't have the proper education, they don't have the proper mentors, they don't have the proper entry models. How are you going to be profitable? Most of these guys on YouTube do not know what the hell they're talking about. A lot of these guys on Instagram don't know what they're talking about. So yeah, if you were to take some of these people's advice, you're probably not going to see success. That's why a majority of traders fail. But if you implement what I say in this video, then I believe you guys are going to be on a very good path to profitable trading. Okay, let's move on to market basics. I am not going to go over trading view and, what a candlestick is, what a market order is versus a limit order. That's very, very basic stuff. I just do not have time to do that. So if you guys don't know how to work TradingView or something, you can watch another video on YouTube. We have to understand how price moves, why price moves, right? Is price just random? Well, no, it's not random. There's something called buyers and sellers, people like me and you who are placing longs or who are placing shorts. And that liquidity, which is just open or resting orders, is what actually moves price. So buying and selling pressure, buying and selling volume is what moves price. If a bunch of people buy an asset, then price will go up because that asset is now more valuable in this case compared to USD. So people are willing to pay a higher premium for this asset because there is more demand and less supply. Okay, so basic supply and demand, buying and selling pressure, that is what actually moves price. Now, this is great, but how can we use this to predict where price is going to go? This is where liquidity comes into play. Any order that is placed on a certain asset is attributing to that asset's liquidity. Now, there is liquidity everywhere in the markets. There's liquidity here, there's liquidity here, there's liquidity here, there's liquidity here. However, there are a few places on the chart or pools of liquidity that you can use to make money. First is going to be highs and lows, right? Liquidity lies above highs and below lows, okay? So all these levels on my chart here has liquidity above and below them. So you can use these liquidity levels to look for potential trades if you have other pieces of confluence. Now, these highs and lows are draws on liquidity, meaning these are areas on your chart where we are expecting price to eventually tap into. Now, there are stronger draws on liquidity than others. A draw on liquidity is necessary to enter a trade. You need to have a draw on liquidity, or preferably a strong draw on liquidity. not all draws on liquidity are made equal. Looking at NASDAQ here on a higher time frame, I see we have this external high that we have kind of consolidated below, and now it looks like we're going back up to this level. You can see just now we also put in this high right below that external high. This creates an equal high, which is considered a strong draw on liquidity. Whenever you have one high and a second high right below that high, this is considered a strong draw on liquidity because there is a massive liquidity pool in here that likely needs to get taken out. So I guarantee you either today, tomorrow, or the day after, we will see this level get taken out on NASDAQ because this is a strong draw on liquidity. Now, similar to that, we have equal lows, which is also a strong draw on liquidity in the opposite direction. Now, another draw on liquidity I like to use is called low resistance liquidity or trendline liquidity. This is when you have a bunch of lower highs, not moving down too aggressively, but just kind of quickly putting in these protected highs, okay? You see we have a high here, 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 kind of forming this bearish trend line. Because we have all of these protected highs in a row, this is going to be a strong draw on liquidity. We call this low resistance liquidity, which means that it's very easy for price to break through these levels. So if I'm looking at NASDAQ on the 5-minute time frame, I see we have some trendline liquidity here. I see we have an equal high right here. If we saw some sort of bullish confirmation, I would not be opposed to entering longs, targeting some of these levels. Now, there's also different types of liquidity. There's external liquidity and internal liquidity. External liquidity are going to be your stronger draws, okay? Price gravitates towards these higher time frame liquidity levels, these higher time frame swing points. Now, if we go to a lower time frame, we have internal liquidity, right? These are these liquidity levels that are not easily visible on a higher time frame, but going down to a 15-minute, a 5-minute time frame, you see we have these lows here. So these are going to be your internal liquidity. And again, those higher time frame levels, for example, this high all the way to the left here is going to be your external liquidity draw. No matter what trade you are entering, you must include a higher time frame external liquidity level, either waiting for price to take out that external level or looking for longs from internal liquidity targeting that external liquidity. Now, these are just high and lows. We also have other types of internal liquidity in the form of fair value gaps. I'm not going to go through what a fair value gap is in this video. There are plenty of videos on YouTube going over that, but you can see here in real time, NASDAQ is playing ping pong between two internal liquidity levels being fair value gaps. This is not random. These fair value gaps act as support and resistance. You can see that in real time, price bouncing between these fair value gaps. To kind of recap, you have internal liquidity, which you would use to take trades towards the external liquidity. And your external liquidity levels are going to be your strong draws on liquidity. Equal highs and equal lows are also strong draws on liquidity. And look for low resistance liquidity to target before entering a trade. That's the basics on liquidity. Now let's talk about sessions, okay? Which sessions should you trade? You have New York, London, Asian. You guys can trade anytime. It doesn't really matter. When I'm trading NASDAQ or even crypto for that matter, I like to trade the New York Open. Okay, so I usually enter positions from around 9:30 a.m. Eastern to around 11:30 or 12 p.m. Eastern. Okay, the reason is because this is New York Open. This is where volume comes into the markets and it just fits my schedule. I don't have time to be staring at the charts all day. So instead, I just trade New York session. I'd recommend you guys to do the same. Now, obviously, if you're swing trading cryptocurrency like I do, then you can enter during any session because you're entering on such a high time frame. It doesn't really matter. You literally have like hours, in some cases days, to get into a trade if you're swing trading. This was a swing trade that we took and called in advance inside of the Pro Discord the other day. Next, we're going to cover market structure. This is pretty simple. When price is making higher highs and higher lows, you want to be looking for longs on a lower time frame. Vice versa is true for a short position. You guys know I love the continuation model, which is essentially looking for lower time frame entries at higher time frame fair value gaps in a trending market, either to the upside or to the downside. And then of course you have your ranging markets or your accumulation, where price is more or less moving sideways, where you can look for sweeps of either the highs or lows. Something to watch out for when you are trading in bullish market structure is a fake out move or a sweep of liquidity. So instead of price continuing the bullish trend, it will come right above and then lose that level, which would be a short entry. So when you're trading trending markets, it's very important that price is gapping above or displacing above these highs. Displacing just means creating space above these highs here. What you don't want to see is price break market structure once again, and then immediately begin failing that high, okay? Not a good sign when you are trading in a trending market. Could be a sign of a potential trend reversion. Okay, so at this point in time, you guys should have a pretty good understanding on how the market moves, what liquidity is, that sort of thing. Now we have to move on to strategy and entry model, okay? How do we actually get into a trade knowing all this, right? Putting all this together. This is where I use my two main entry models, and these are the entry models that I would recommend to all of you guys watching out there as well. The first is going to be the inversion model using something called inverse fair value gaps. Again, I've made videos on this channel going over inverse fair value gaps. I don't feel like repeating myself every single video. So you guys can subscribe to this channel, watch my other previous videos where I go a little bit more in depth in the entry models in specific. The inversion model is taking a trade off of a higher time frame fair value gap, like a 15-minute or 1 hour fair value gap, having a clear draw on liquidity above, and then looking for a 1 to 3 minute entry on a lower time frame with an inverse fair value gap, targeting that draw on liquidity. The second entry model I like to use is going to be the 1-2 setup. Same original context as the inversion strategy, except this time we are waiting for a lower time frame market structure break, followed by a retracement into our golden pocket fib. Draw my fib. That is the 0.618 and 0.65 Fibonacci retracement levels. So this would be your market structure break. Then you would draw your fib from the swing low to that swing high. Again, delivering off of a higher time frame key level. This could be a fair value gap, an order block, etc. And once again, targeting your draw on liquidity. So an external high in this case, an equal high. Maybe there's some low resistance liquidity here that you can also target as TP. So these are the only two entry models that I will use in my trading, and gives me a really good win rate, very confident setups, very high risk to reward setups. So we can take actually the long position that we took today, even though it was a break-even trade. Here we had our 15-minute bullish fair value gap to the left here. Do we have a draw on liquidity? Yes. We have all of this low resistance liquidity and equal high here we can target, and we still had that external draw on liquidity above us. So all we do is go to a lower time frame, 1 to 3 minute time frame, look for an inverse fair value gap, which we get right here. There would be your entry, stop loss to break even at the most recent high, which I'll get into how we actually manage these trades. So this was a break even trade today, but these are the types of trades that I would take. Now let's look at entry model 2 that I took on Hyperliquid. We are delivering from a key level, right? Sweeping external liquidity to the left here. This is our fake out move, and in this case, I waited for the 1-2 setup, so I get my fib out. There is the market structure break. There is our bullish fair value gap here on a 1 hour time frame, retracing right into the golden pocket fib, and there is my 1-2 setup right there with my stop loss at this low. Do we have a clear draw on liquidity? Yes. Okay, we have this trend line liquidity above, and we have some equal highs all the way to the left here, which we can target as TP as well. So first trade I showed you, which was a break even, was using the inversion model, and this is a winning trade using the 1-2 setup. Okay, now let's talk about live trading accounts versus funded accounts. If you guys only have a couple $100s to your name, what I would recommend is getting a funded account. For NASDAQ, I would recommend Lucid Trading. You can get funded up to $250,000 for around $400 total. This means once you pass their challenge. So to start, I would say trade on a prop firm just to get the hang of your trading system. Wait until you're a profitable trader. Wait till you get some payouts, and then you can move on to a live account after that. For crypto, there aren't too many options for funded accounts, so I would honestly recommend just trading on a live account. All right, really quick, guys, in between me making this video and now me editing, I have actually partnered with a prop firm called ATS Funded. You can get funded up to $400,000 with ATS Funded, and you can pass in just one trade because there is no consistency rule during the eval stage. Now, the best part about this prop firm is they will actually pay you monthly retainer. So let's say you pass a 100K funded account, you get 2 payouts of any size. It doesn't matter the size. They will pay you $1,000 per month, 1% of your total funded amount, just for holding the funded account. I've never seen another prop firm pay you a monthly salary. So if you guys are interested, I'll leave a link down in the description below. Yeah, I would highly recommend ATS Funded for all of my crypto, stock, and gold traders. Anyway, back to the video. Okay, next let's talk about trade management. Where do you put your stop loss? Where do you take profit? When I enter a trade, right? For example, this trade I took here on Hype, I will put my stop loss below the nearest POI. So a POI is going to be a point of interest. This could be an order block, a fair value gap, but because we are delivering from this bullish fair value gap, this is the nearest POI. I will put my stop loss below that fair value gap. At that point, my trade thesis is invalid. I will always move my stop loss to break even at the most recent structure high. So this would be stop loss to break even level. And I will target these external levels as my TPs. Very, very simple. On to psychology and mindset. So think of it this way, okay? When you enter the markets, you are by default a break-even trader, meaning if you were to take 100 trades randomly at a 1-to-1 risk to reward ratio, no strategy in place, just using proper risk management, right? Risking 2% of your account per trade, and took 100 random trades with no strategy in place, according to the law of probabilities, you would be a break-even trader. Around 50 of those 100 trades would be winning trades at a 1-to-1 risk to reward, and around 50 of those trades would be losing trades. So by default, you are a break-even trader. You are not a losing trader. By the laws of probabilities, you enter the markets as a break-even trader. Of course, there are a few fees, so, slightly below break-even. All you're looking for in trading is that slight edge, okay? That little edge that pushes you from 50% win rate to 60% win rate, or maybe 40% win rate, but, a 1 to 1.5 risk to reward ratio. So now you're making more on your wins than you're losing on your losses. All you need is that slight edge. That is our goal with our trading system. That is what we are striving for, that small edge. It doesn't mean we're going to win 100% of our trades. Even if you have the greatest strategy in the world, you will still lose 2, 3, 4, 5, 6 trades in a row. There will be losing streaks, just like there will be winning streaks. Overcoming FOMO and revenge trading is just something that's going to take time in the markets. I can't tell you, dude, just stop revenge trading. You have to make that decision. That's just going to come from time in the markets. There's no getting around that. Some people just naturally don't feel the need to revenge trade or FOMO. Like me personally, I'd never feel the need to FOMO a trade, but it can happen for some people, and that's a mistake that you're gonna have to learn from. Okay, next, journaling and review. After I live stream inside the group every single day, I always post a trade recap. Well, that is to show you guys why I entered the trade. It's also for myself. I like reviewing my own trades, understanding where I went wrong, if I went wrong, looking back, seeing where I could have potentially executed better. That way I'm always learning. I'm always a student of the game. I'm never going to fully 100% understand the markets. That doesn't mean, however, that you can't become a consistently profitable trader. As long as you have the systems in place, like I've showed you in this video and like I teach inside of the pro group, and you understand what to look for on the charts, you understand liquidity, then you can absolutely become a profitable trader. But always be documenting, always be learning. Next, consistency and routine. You should have some sort of pre-market routine or routine before coming to the charts every day. Humans are creatures of habit by default. So I like to get into a little schedule, right? I like to have my caffeine. I like to have my nicotine. I like to be listening to some house music. I like to get on the charts at the same time every single day. I'm building a habit every single day. I'm building a routine so my body and my mind, more importantly, gets used to it. And as a byproduct of that, I'm actually a more profitable trader. You should also have routines for your trades themselves, meaning have a trade checklist, right? Inside the group, I have a full checklist on everything I look for before I enter a trade. You guys should have that as well. Have a tested and proven strategy in place. Mark down step by step what exactly you need to see before you enter the trade. Visualize it, have it written down. Have it on your chart. Plan in advance what you want to see. This makes it very difficult to give up on trading. If you have a proven system and you have it written out in front of you and you follow that system every single day, win or loss, it's very hard to not see success with trading. Most of you just aren't doing that. You don't have trading rules. You don't even have a strategy in place. You're not writing stuff down. You're not tracking your trades, and you're wondering, how you're not profitable. Well, there you go. Remember, we are in this for the long run. We are not in here to just make a quick buck. Okay, trading has completely changed my life, and I intend on trading for the rest of my life. Maybe not the rest of my life, but for the foreseeable future, I am going to trade the chart. So I want to implement good practices now that are going to help extend my career. So I don't just get lucky on one trade and then lose it all the next trade. So I can consistently do this in the markets, providing myself a real income. Well, I think that's going to wrap up this video. I didn't get into any indicators in this video. I do have my own custom coded indicators that you see on my screen here, showing you guys these higher time frame for value gaps, alerting you guys for when our entry model fires in real time. These things can help remove the guesswork, especially if you're a new trader and you don't know what to look for. You don't know what a liquidity sweep is. You don't know what an inverse for value gap is. But definitely, I would highly recommend looking into our indicators and looking into the pro group if you guys are serious about taking your trading to the next level. Not only will you get access to these indicators, you will also be able to follow all of my personal trades. So anytime I'm entering a crypto trade, I will alert you guys. I also go live every single morning to trade NASDAQ. So you guys can literally follow my exact trades live every single day, get access to our trading tools and resources, join a like-minded community of other traders. That's something else I wish I put at the beginning of this video. It's very important that you are surrounding yourself with other traders, with other people that have the same common goal that you do, okay? Because trading is a lonely sport. It's very lonely. It's you versus you every single day on the charts. I find that it helps a ton to be in some sort of community. So whether that's my community or someone else's community, just being around and talking to traders every single day who are trying to do the same thing you are doing, who are entering the same trades that you are entering, who are giving you feedback in real time. And that can expedite your profitability like 10x compared to someone who doesn't have that community. I think I'm going to end it there. Let me know if you guys have found value. I didn't go too in depth into strategy. I didn't go too in depth into anything. This was a very broad overview on going from, not knowing much about trading to having a good foundation to becoming profitable. That's gonna do it for me in this video, guys. Make sure to leave a like if you have enjoyed. Subscribe to the channel for more trading content, and I'll see you guys next video.